The SEC, we've reported on this, we've talked about this sort of pre-IPO market. A lot of it came to light when Facebook started becoming more popular and more. Now the SEC is getting involved. They are cracking down. Gene Eaglesham is here with the details.
Yeah, the SEC has been looking at this whole market for a year, and over the period it's been looking at it, the market's been booming. Because in the run-up to the Facebook IPO, people are desperate to get hold of the stock in these hot companies, Facebook, Twitter, Zynga. People just want to get hold of this stock if they can. There's a very booming market. SEC's concerns are about the potential lack of transparency in the market. How do you value this stock when these companies aren't quoted? And what we've seen now is the SEC's filed charges against 3 firms. And with 2 of those firms, the charges involve secret commissions being taken, so hidden charges, and also, in one case, investors being misled, the SEC says, so that they claim, for example, this firm to have Zynga stock in a fund when they didn't. So the SEC is trying to shine a light.
Sort of simple fraud, actually.
Well,
it sounds like a simple fraud.
In this case, yeah, it's clearly misleading people.
Yeah.
In another case, they claim Twitter's revenues will be a certain figure without knowing that.
Yeah.
So it's sort of overselling. It's what they sort of boilerplate emails being sent out to solicit investments. And what's interesting about the crackdown as well is it comes as there's this very controversial proposed new law called the Jobs Bill that's going through Congress. And the idea of that is to relax some of the constraints for small companies trying to raise capital, trying to raise money. And the SEC is concerned about that. Mary Shapiro, the chairman, has written to Congress this week saying she thinks it goes too far in easing the
Because part of that bill, as you pointed out in your story, would sort of facilitate this black market in these pre-IPO shares, right?
It could help this sort of secondary market.
Right.
For example, with one of these firms, it was charged yesterday by FINRA and another of the regulators with breaking the rules on general solicitation. That's basically sending out cold calling, sending out these emails to investors out of the blue saying, why don't you buy this stock? Now, the bill that's being discussed in Congress would make it easier to do that kind of general solicitation, do that kind of those kind of emails. So,
sorry, go ahead.
No, so I just say, so it comes at a very sensitive time, and the SEC, we said to them, you know, is this coincidental timing? And they said, of course we haven't timed the law enforcement action to try and lobby politically, but it is helpful to their cause, I think.
I think what's really interesting here is that the whole future of the second market, everyone's been pointing toward Facebook and Twitter, as you said, and Zynga, and once Facebook goes public, is there really going to be a future for secondary market trading? I mean, are people going to want to still invest in these private companies, especially with the SEC cracking down now as it is? Is there still going to be a market for it?
I think it's a great question. I mean, there's no doubt once Facebook has gone public, it will hit this market. There's a number of firms now that have got established there, not all of which obviously were charged by the SEC. So I think they think there's a future there. How healthy the market's going to be after Facebook, I don't think anyone really knows yet. And there is a concern, I think, that the SEC action will have something of a chilling effect.
And is the SEC late to the game here in finally taking some steps now to, to try to tighten some rules here? I mean, it just seems like this market has been growing for quite some time now. Why didn't the SEC act a year ago or 2 years ago? Why now?
Well, they would say that their scrutiny has already had some positive effect, that some firms have changed how they operate. For example, Shares Post, which was one of the firms charged by the SEC, has registered last year as a broker-dealer, and that's what the charge centred on, was the fact that they weren't in 2010 registered as a broker-dealer. So the SEC would say its scrutiny has already had some positive effects, and by its standards this has been relatively quick, a 12-month probe resulting in action.
The wheels of justice, Steve Russo. They grind slowly but surely. Gene Eaglesham, thank you very much for coming on. Pleasure.